Hey, welcome back to the What the Wealthy Do podcast, where we break down the money moves the wealthy make and show you how you can apply those same strategies to your daily life on your wealth building journey. I am your host, Stephanie Dorsey. I am the CEO and co-founder of Margins Capital. Margins Capital is an investment fund that provides women and people of color access to an institutional quality portfolio of alternative investments. And this is the last episode in our alternative investment series. We have discussed private equity, venture capital, commercial real estate, hedge funds, infrastructure, natural resources, and today we're going to talk about something that might seem like pure fluff, but it's not. It's actually a serious wealth building strategy for those who know. So this is investing in fine art and luxury goods. Now, I know you're probably thinking like, girl, like, now you want me to buy a Picasso? I'm not saying all that. Hear me out. What I'm about to show you is how the wealthy use art, watches, handbags, wine, and even sneakers to diversify their portfolio and hedge against inflation and quietly grow their wealth. And what I think the key thing I want you to take away from this is you can invest in things that bring you pleasure and bring you joy. It's not all just investing in an oil rig or something like that. Like, you get to invest in things that also are beautiful. It's something that is beautiful and that can bring you pleasure, can also make you a lot of money. And one of the things that I think the wealthy do that a lot of us don't do, who are not yet wealthy, and we can start to do this now even while we're in the wealth building phase, is spend our money or invest our money in things that bring us joy today. Like, we don't have to wait until we become ultra high net worth or millionaires in order to enjoy and get pleasure from our life today. I think that is just a beautiful thing that the wealthy do that we should be doing yesterday. Right? So before we get started, you know the drill. This is financial education and not financial advice. So let's hop into it. So let's first define what we're talking about. So fine art includes paintings, sculptures, and photography from established or emerging artists. Works from blue chip artists like Basquiat and Warhol, Monet, Koons, contemporary art from galleries and auction houses. Luxury goods include high-end watches like Rolex, Patek Philippe, Audemars Piguet, designer bags like Hermes Birkin, the Chanel Classic Flat Bag, rare sneakers like limited edition Jordan or the brand Off-White, fine wine and spirits like Bordeaux, Burgundy, or rare whiskeys, classic cars like vintage Ferraris, Porsches, and Mercedes, jewelry and rare gemstones. Now, here's what makes these things or these investments different from stocks or real estate is that they have intrinsic value based on scarcity, craftsmanship, and cultural significance. So Hermes Birkin bag isn't just a bag, it's a status symbol with a wait list. A Basquiat painting isn't just art, it's a piece of cultural history. A 1961 Ferrari isn't just a car, it's a collector's dream. And the wealthy, they know that these items can appreciate faster than the stock market if you know what you're buying. So let's talk about why ultra high net worth crowd is putting millions of dollars into paintings and watches. And let's be clear, I am not talking about your recently turned millionaire influencer. I'm not talking about that. I am talking about aficionados who know what they're doing. They know how to evaluate these items and buying these items not to flex on the gram, but to derive pleasure, certainly, and maybe they are flexing for their friends a little bit, but they are intending for these items to appreciate in value. So we are talking about the people who are investing in these items, not trying to derive their own self-esteem from owning these items. So let's be clear. I want you to make sure you understand that distinction. So why are the ultra high net worth individuals investing in these items? One, the appreciation potential, right? So fine art art has historically outperformed the S&P 500 over certain periods. According to the Citi Global Art Market Report, art has delivered annualized returns of around 7 to 10% over the last few decades. Like, that's competitive with stocks, but with way less volatility. And in luxury goods, even crazier. An Hermes Birkin bag can appreciate 10 to 15% per year. Some rare Rolex watches have doubled or tripled in value over the last few years, and limited edition sneakers that retail for $200 are now selling for $2,000. There's actually a fund that you can invest in that buys and sells Birkin bags. It's a thing. It's a real thing. Another benefit to investing in these items is an inflation hedge. So as inflation goes up, so do the prices of these luxury goods and fine art. And so the wealthy use these assets to protect their purchasing power. While your cash is losing value sitting in the savings account, their Basquiat is gaining value on their wall. Right? And also, these are tangible assets. Like we talked about real estate. Some people just like they want to see it, touch it, feel it, enjoy it. Sorry, I literally just heard the Busta Rhymes song in my head, but whatever. Touch it, feel it. Anyway. So unlike stocks and bonds, art and luxury goods give you the actual pleasure while they appreciate. The wealthy get to wear the watch, drive the car, or hang the painting and still make money. Portfolio diversification. Art and luxury goods don't move in sync with the stock market. When stocks crash, a rare handbag or painting might hold its value or even go up. And that lack of correlation makes them powerful portfolio diversifiers. And then there are tax advantages. If you donate appreciated art to a museum or charity, you can write off the current market value, not what you paid for. So I bought a piece of art for $1,000. I donated to a gallery and it's worth $10,000. I get to write off $10,000, not the $1,000. And that's a huge tax break. Plus, art can be held in trusts or family offices to minimize estate taxes. That's really good too. It's really good. And then this is an opportunity where passion meets profit. Again, we are only talking about the people who love this stuff. We ain't talking about the clout chasers. So the wealthy invest in what they love. If you're gonna spend your hard-earned money anyway, why not spend it on something that might double in value and you get to benefit from it? So this is why you see billionaires drop $100 million on a painting or building car collections worth more than most people's retirement accounts, because it's not just flexing, it's strategy. It's like, well, if I'm gonna spend it anyway, I might as well benefit from it. I might as well get some enjoyment from it. All right, so let's break down the art market. When you invest in fine art, you're betting on a few things. One, so you're betting on artist recognition. So blue chip artists, the ones with museum shows, auction records, and global fame are the safest bets, right? So think Warhol, Picasso, Basquiat, Koons. Their work has proven demand. You're also betting on provenance. This is the art world's version of a clean title. Provenance is the documented history of who owned the piece. Strong provenance increases value. Sketchy provenance is a red flag. Also, the condition. Just like with real estate, condition matters. A painting that's been properly stored and cared for is worth more than one that's been damaged or poorly restored. Market trends. Certain artists or movements go in and out of favor. Right now, contemporary African and Latin American artists are hot. I know, star moment. I love that. I love that. Impressionism has cooled off a bit, but still commands high prices. It's so funny. Like, I love art and I'm working on learning more about it. Rarity. Limited supply also drives value. A one-of-a-kind piece from a deceased artist, that's gold. But a print from an edition of 500 is less valuable, but still potentially profitable if the artist becomes famous. The wealthy don't just buy art that they like. They buy art that will hold and increase in value. I mean, they work with advisors, they attend auctions, and they track market trends, because again, just like everything else, this might be for you and it might not be for you, but you only need to invest in it if it aligns with who you are and your goals, right? So how do luxury good investments work? So the luxury market operates on scarcity, brand power, and desirability. So watches, brands like Rolex, Patek Philippe, and Audemars Piguet hold their value because they produce limited quantities and have decades of brand equity. Like a steel Rolex Daytona that retailed for $13,000 in 2020 is selling for $35,000 on the secondary market today. And the secondary market is basically just not getting it directly from the store. You're getting it from a second type store, a second place. The wealthy buy these watches not just to tell time, right, but to store value. And unlike a car, a well-maintained luxury watch can appreciate over time. Handbags, Hermes, Birkin, and Kelly bags are the holy grail, apparently. They're handmade and they're limited in production and notoriously hard to get. So the average Birkin costs between $10,000 and $30,000 retail, but on the secondary market, some sell for $50,000 to $300,000. And that's better than most mutual funds. Like, it's crazy. And you get to carry it and enjoy it and see it. Sneakers, similarly, the sneaker resale market is now worth over $6 billion. Limited edition drops from Nike, Adidas, and luxury collaborations can flip for 5 to 10x retail price. One of our business advisors, he buys and sells sneakers on the side because he's just a sneakerhead. So the wealthy and savvy Gen Z investors are definitely treating sneakers like stocks. Wine. So fine wine from regions like Bordeaux and Burgundy have become a serious asset class. I mean, a case of 1982 Chateau Lafite Rothschild that cost $1,200 in the 80s is worth over $30,000 today. Wine funds and storage facilities allow investors to hold wine in temperature-controlled environments and sell when prices peak. Classic cars like vintage Ferraris, Porsches, and Aston Martins have become a collector's items. A 1962 Ferrari 250 GTO sold for $48 million at auction. And even more accessible classic cars like 1980s Porsche 911, that's when I really fell in love with those cars, have doubled or tripled in value over the last decade. And the wealthy see these assets as stores of value that also bring joy. And I know some of you are like, girl, a $48 million Ferrari, why are you talking to me about this? I'm claiming this for you. And you need to know about it before you get there, right? So if this is where you want to be, this is where I want to be. I probably will not invest. I ain't gonna hold you. I'm not a car person. Even though I did want that 1980s Porsche 911. I did. I really did. So maybe, maybe when I'm worth $300 million, I might. You know what I mean? I might. And here's the thing. Now I know this stuff before I get there, right? So, okay, back to our regularly scheduled program. Risks. Let's talk about the risks that you need to be aware of before you just start, hopping out here. So illiquidity, obviously, is a risk, but this is a stated risk for all of alternatives. You can't just sell a painting or a Birkin bag overnight like you can sell a stock. I mean, finding a buyer takes time, and auction houses can charge hefty fees, 10 to 25% of the sale price. There can be high transaction costs. Like buying and selling art involves gallery commissions and auction fees and insurance and storage costs. And those fees can eat into your returns. Authenticity and fraud. The art and luxury markets are plagued with fakes. They really are. So you need to verify authenticity through experts, certificates, and provenance. One mistake and you've bought a worthless fake, like for real. But it is worth it if you're interested, right? Like if this is your jam, I go for it, girl. Go off. Market volatility, trends change. An artist who's hot today might be forgotten in 10 years. A luxury brand can fall out of favor. You're betting on taste, and taste is fickle. Storage and maintenance. Art needs climate-controlled storage. Wine needs cellars. Watches need servicing. Cars need garages, and these costs can add up. Emotional attachment. It is easy to fall in love with the piece and overpay, right? The wealthy invest with their heads and not just their hearts. They literally work with experts that know the space. But here's what the wealthy know. If you buy smart and hold long term and work with experts, the rewards can outweigh the risks. All right, so how can you get started without dropping the $100,000 on the Basquiat? There are fractional art ownership platforms. Like, have you heard of Masterworks? Will let you buy shares in blue chip artwork, and you can invest as little as $1,000 and own a fraction of a Banksy or a Warhol. And when the piece sells, then you get your share of the profit. And in luxury good resale markets, sites like The Real Real and Rebag and whatnot will let you buy authenticated pre-owned luxury goods at a discount, and you can flip them later for profit if you buy smart. I bought my Chanel bag. I always wanted one, and I treated myself to one off the real. And there are sneaker resale platforms. You got to be careful because StockX got in trouble. But apps like GOAT will let you buy and sell limited edition sneakers like stocks, and you can start with a few $100s. Wine investment funds exist as well. Platforms like VinoVest let you invest in fine wine portfolios and that are managed by experts, and you don't need a seller, and they store it for you. Watch investment platforms like companies like Bezel and Holden Key offer authenticated luxury watches, and some platforms are exploring fractional watch ownerships. And auction houses and galleries, if you're serious and have capital, work with Sotheby's, Christie's, or reputable galleries. Like, hire an art advisor to help you make smart purchases. Like, I'm telling you. And the key is to educate yourself first with all of this stuff. Like, you don't just go out there and spend $5,000 on a handbag thinking it's an investment unless you've done your research. But I will tell you, Louis Vuitton and Chanel bags have definitely gone up significantly over the last couple of decades. Here's the mindset shift I want you to make and why I made this episode. The wealthy don't see art and luxury goods as spending. They see them as strategic acquisitions. They ask, will this appreciate in value, and can I enjoy it while it grows in value? Does it diversify my portfolio? Can I use it for tax advantages? They're not impulse buying. Like, again, we're not talking about the clout chasers. We're talking about real investors here, and they're investing with intention, and you get to do that too. Here's the beautiful part. I mean, they get to live with and enjoy these assets while they appreciate, right? And again, that Birkin, she's wearing it to brunch and to board meetings. The Basquiat is hanging in the living room. Like Beyonce and Jay-Z always talking about their Basquiat. Same with their very expensive watches. And that is something that I want us to start to think about too. How can I invest my money or spend my money in things that are going to appreciate in value, but also going to enrich my life on it from a day-to-day perspective, not just when I sell it in a few years. So don't forget that all of these items are good for portfolio diversification, as well as, it can be additive and appreciative to your portfolio. And you don't have to wait until you're a multimillionaire to make some of these investments if you're interested in art, if you are in love with luxury goods. Like, if this aligns with the things that you care about, then go off. That is it for today's episode of What the Wealthy Do. I hope that you enjoyed it. Clearly I did. We broke down fine art and luxury goods and how they can be additive or accretive to your portfolio, but they also can be additive and accretive to your personal life and fulfilling and adding joy to your personal life. So if you found this episode to be helpful, feel free to share it with a friend. Also, don't forget to like, follow, and subscribe wherever you like to get your podcasts. We're on Apple, Spotify, and YouTube. And until then, I'll see y'all next week. Bye.